The battlefield analysis. Let's demolish the confusion around Kaspa's current price prison. For weeks, Kas has been trapped in what I call a decision triangle, and every single day that passes increases the explosive potential of its next move. Here's the brutal reality. Kaspa has been painting a textbook descending wedge pattern since July, with each rally attempt getting weaker and weaker. This isn't random price movement, this is algorithmic precision creating a pressure cooker effect. The descending trendline resistance has rejected KS bulls exactly 7 times, 7 failures. Each rejection creating lower highs, slowly bleeding momentum from buyers who thought they were catching the bottom. But here's what separates professional traders from amateur speculators. That support level at 8 cents isn't just another line on the chart. It's become a psychological battlefield where institutional money has repeatedly stepped in to defend their positions. Think about the mathematics. Every time bears push KS toward 8 cents, massive buy walls appear. Someone with deep pockets is accumulating at these levels, creating artificial price support that shouldn't exist in a purely retail-driven market. The critical zone warfare. Now let's expose the dangerous game being played beneath the surface. The 8-cent support isn't just holding. It's being systematically tested by sophisticated traders who understand something retail investors don't. Every test of this support level comes with decreasing volume, which tells us a disturbing story. The buying pressure that initially created this support is gradually weakening. Each bounce gets smaller, each recovery takes longer. This is textbook distribution behavior, where large holders slowly unload their positions to smaller fish who think they're buying discounts. If, and this is a critical if, the 8-cent support finally cracks, we're not looking at a gentle slide lower. We're looking at capitulation selling that could drive KS down to $0.072 within hours, not days. That's a 10% drop that would trigger stop-loss orders, margin calls, and panic selling from leveraged traders who thought 8 cents was safe. But here's the twist that makes this analysis fascinating. The very weakness that threatens this support could also fuel the explosive rally we're anticipating. Before I reveal the exact conditions needed for Kaspa's breakout sequence, smash that like button if this technical breakdown is opening your eyes to what's really happening beneath KS price action. Hit subscribe with notifications, because missing the next phase of this analysis could cost you serious profits. The breakout blueprint. Here's where most traders get it completely wrong. They're watching for a simple trendline break, but that's amateur hour analysis. Kaspa's real breakout requires a perfect storm of technical conditions that most people don't understand. Condition number 1. KS must break above the descending trend line with volume that's at least 200% above the 20-day average. Anything less is a fake breakout that gets sold into within 24 hours. Condition number 2. The break must happen during Asian trading hours when Kaspa's liquidity is typically lower. This might sound counterintuitive, but lower liquidity means less resistance from profit takers during the initial breakout phase. Condition number 3, and this is the secret sauce most analysts miss. Bitcoin must be either consolidating or slightly green during Kaspa's breakout attempt. KS cannot rally independently while Bitcoin is selling off. The correlation is mathematically impossible to overcome. When these 3 conditions align and historical data suggests they will within the next 10-15 days, we're not looking at a modest 10 to 15% bounce. We're looking at a violent short squeeze toward the July highs near 11 cents. That's a 40% explosive move that could happen in less than 48 hours once it begins. The September prophecy. September isn't just another month for Kaspa, it's potentially the month that determines the next 6 months of price trajectory. Here's why the timing is absolutely critical. Historically, Kaspa shows increased volatility during the first 2 weeks of September as institutional traders return from summer break and reassess altcoin positions. This creates unusual buying pressure on fundamentally strong projects. Add to this the technical setup we've analyzed, and September becomes a powder keg waiting for ignition. Scenario 1, support holds, we get our breakout and KS rockets to $0, 11 plus within 2 weeks. Probability, 35%. Scenario 2, support breaks, we see capitulation to $0.072, followed by aggressive accumulation and eventual recovery. Probability, 40%. Scenario 3, continued sideways action that slowly bleeds retail interest until October. Probability, 25%. The mathematics favor dramatic movement over continued consolidation, which means September will be anything but boring for KS holders. If this probability analysis is helping you understand Kaspa's true risk-reward potential, show your appreciation by crushing that like button and subscribing for more surgical technical breakdowns. Your engagement helps me continue delivering the analysis that separates winning trades from devastating losses. Kaspa's current position represents the classic high-risk, high-reward setup that creates millionaires and destroys portfolios in equal measure. The technical indicators are screaming that a major move is imminent. The only question is direction. Whether you're positioned for the breakout or preparing for the breakdown, the next few weeks will test your conviction and your risk management skills. In markets like these, preparation beats prediction every single time. Thank you for joining me on TJ Crypto World for this critical Kaspa analysis. If you want to stay ahead of the price movements that could make or break your crypto portfolio, check out my recent deep dive into the 3 altcoins showing similar explosive setups. The link is right here. Until next time, keep your positions sized appropriately, your stop losses updated, and remember, in cryptocurrency trading, the biggest opportunities come disguised as the scariest uncertainties.